Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Okay, so we took this trade here on Wednesday, I think it was. Bulgaria. Okay, very nice. So we took this on Wednesday. Okay, so we have our trend going up. We have the overall pullback. We have the oil crisis going on. So we're looking at the likes of solar power to potentially take off. It's had a little bit of a growth. People are looking at it, so on and so forth. It also has earnings coming out on the 26th. I would have liked to have seen a little bit of a jump to the upside before the earnings are coming out, but it looks like we're not going to get it playing ball. So then we have a question mark to ask ourselves. Do we want to stay in this trade and go through earnings, or do we pull the plug before earnings comes out? We look at here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 earnings are good before the last one that was bad. Okay, so that's a question across the board. Do we want to hold on to this? Now, this is a CFD, so this is not an underlying asset. So this is a CFD. So if we get a gap, we will lose more than 1% if a gap's down. If a gap's up, it means then happy days. The chance of us hitting the 3-to-1 is very good. So do we hold on to this through the earnings, or do we now? So at the minute I risk 100 quid. So at the minute we're down about 35 to 40 quid, around that at the moment. So what's the consensus across the board here? Are we happy to stay in this? Are we happy to jump out of it? What do we think? I want everyone on the webinar to actually have a say on this, because this will happen. This will happen as you're trading. Now, the thing about it is that there's no right or wrong. There's no right or wrong answer to this. It's you have to make an educated decision on the information that you have. So then we have to go there. So it comes down to you as a person. And then you understand that I'm risking 1%. Unless they have a huge, really bad earnings, I don't foresee any gap any bigger than that, which would be 3%. Okay, so if you do hold it, I don't see massive, huge downside. So I've got my entry was higher and I didn't get triggered in, so I will cancel it, the CFD, and probably buy the underlying asset. But again, is the trade still valid? So if the trade is still valid, I don't see any reason for you to cancel the order, if that makes sense. Because if earnings is good, you get triggered in on the way up. If earnings are bad, you just don't get triggered in at all. So Audrey, you're actually in a win-win situation at the minute. Okay, so the general consensus is hold. Now, my general consensus is as well hold, because I don't see a huge drop. Even if we do get a drop, I don't see it coming anywhere past here, which is only 1 or 2% extra. Okay, so I'm happy. I'm in the trade. It's traded for a reason. We have a horizontal here. We also have our trend line. we have our cyclicity, we have a trend. Okay, so I am happy to leave the trade here. If we look at earnings, I know we never really go on past performance, but if we're looking at this, there's 12 good earnings in a row. So for me, I would expect the earnings to be good. Now, how good? I have no idea. There's a 22% jump there on the earnings. If we get anywhere like that, again, we will have a nice jump. But then the other side of it is that if the Nasdaq continues to drop, the S&P and the Dow, if they continue to drop, will we be triggered out of that trade before that even happens? So that's a second scenario. Okay, we may not be in that trade. Why? Because if the Nasdaq, the S&P, and the Dow continues to drop, we may not actually be still in this trade. All we need is one more selling day and we're out. So the idea is we're looking for today to be a positive day across the board. One, across the likes of the Nasdaq, the S&P, and the Dow, and then two, even if they're negative, a good day across the likes of the solar energy. And if we have a good day across that, that gives us that little bit of buffer, that gives us that little bit of extra momentum. But in my opinion, we're quite well placed. It's just now whether our stop loss is big enough to keep us in this trade or not. And that's my opinion. Now, question, just say we get triggered out of this trade here. So just say today's bar does this. And then tomorrow's bar does this. And then this. And this. Is our original trade still valid? We've been stopped out of this trade now. Would we place this trade again? Oh, the pre-market just popped in here. It's a little bit higher, which is good news. So if we get stopped out there, that trade is actually still valid. Placing that again is an actual option there if we get stopped out of that trade there. So just say this trade gets stopped out. There's nothing stopping you. If you still believe that the earnings are going to be good, there's nothing stopping you again placing that as a sell. There's nothing stopping you placing that trade again as a long position. Entry there. Just the stop loss is a little bit bigger this time. Stop loss underneath that horizontal. Your take profit just inside there. 3 nines is 27. Somewhere around there, take profit. So just because we get triggered out of a trade, just because our stop loss wasn't safe, just because the market disagreed with our entry here, doesn't mean that this is a bad trade. If that hovers around that horizontal, if it plays around there, there's still an opportunity for this trade to be placed. Okay, so 0.39 per share. What is the expected? The expected is 0.67. So that's a huge, is that Tony, is that correct? Are you sure you're correct on that? Because that is a huge shortfall. So Tony has said something. Analysts expect the company to announce earnings at 0.39 per share for the quarter. Can you pop that article in the Discord group? That means now anyone who's looking at this now needs to do a little bit of research on that. Needs to have a look. Is that what the expected earnings are? If the expected earnings is 0.39 and the estimated here is 0.67, what's that? 40% lower than expected, which is a huge drop. And in that case, then we cancel our trade and we get out of it. Okay. But if that's not the expected and we get stopped out, there is an entry still available at the same time. Below the level is our stop loss. And if the trade and the earnings go in our favor, then there's huge potential upside in this. Okay. So we'll leave that there and see how that plays out over the next couple of days. So the Nasdaq. So over here to sort of the bread and butter, we're looking for the index, and the index has had a pullback here. Now, we talked about this potential trade on the smaller time frame. We actually had a poll on which of the two trades do you think is more likely to happen, and the poll said that we expected it to come down here. Now, I expect the same. Now, there was a trade there, but again, we talked about it. Some people decided to take it, but it wasn't a high probability trade. Drop triggered in. Did you get up to a 1-to-1? I doubt it. 1.46, 1.9. So barely scraped a 1-to-1 on it. Anyone that took that trade, and then eventually got triggered out. So again, it's not something that I would have taken, but there was a potential trade there, and you would have scraped a 1-to-1 out of it. Now, if we look at the last couple of days, now I understand there's a bank holiday here in the UK on Friday and Monday, so trading volume has dropped. So can we really look at these last couple of hours? Well, we just understand that the trading volume has dropped. But if we look at it, we 1, 2, 3, 4 bars, and it hasn't really gone anywhere. Today's futures market also hasn't really gone anywhere. It's sort of waiting to see what's going to happen. Now, when the market is waiting to see what happened, what do we do? What should we do when the market is waiting to see what's happened, like it is now at the minute? What's our expected next movement in this market? Absolutely, we wait for clarity. Now, looking at this market, where do we expect it to go? Now, overall, we'd expect it to go down to here. But if you're an optimist, you're looking at, well, as 1, 2, 3, 4 times it's tried to go lower, and it has failed. So 4 times it has failed to go lower. So there is a potential for the upside on this here. But for me, it is less likely to go to the upside than it is to the downside. In my opinion, I see more buyers jumping in here than here. So it's now sort of a waiting game. Do we jump in now? Do we wait? And for me, there's not enough upside in this to be jumping in right this second, in my opinion. But again, like last Wednesday or Tuesday, there is a potential trade there on that low test bar. Entry there, stop loss below it. Is it a trade that I would take? Nope, not necessarily. So 246, so 7%. Higher than that. About there. So there is a potential trade there, but again, it's not something that I would take. It's not it to me. There's more downside in this. But looking at price action, 1, 2, 3, 4 bars that really haven't gone anywhere. Now today's bar we ignore because it's today's bar. There's nothing happening with it. So 1, 2, 3, 4 bars, and it has been sort of moving sideways. It hasn't really gone anywhere. So there is a potential movement for an upside here. But again, we have to sort of wait and see how the market has reacted after the bank holiday and today jumping in on this. Also, I believe that Russia has threatened the likes of US with sanctions and war and all that sort of stuff, cutting off oil. There's a bit of turmoil after happening over the weekend. So also we need to keep an eye on that. We have a look at the S&P. So the S&P 500, very, very similar. We're back down to this level here. So we're back down to this level. Again, it has this low test bar. We are bouncing off a level, and it's very, very similar to the Nasdaq. In 1, 2, 3, 4 days, it really hasn't gone anywhere. There's been no movement. The market has moved sideways. It's sort of waiting on something before anything happens. So this is not an area where we'll be looking to get in. It's better than the Nasdaq, but again, it wouldn't be something that I would be looking to take myself. But if it took off to the upside, it wouldn't surprise me. But theoretically, I would expect more downside than up. And very, very similar with the Dow. Again, the Dow has been a little more bullish than the likes of the S&P and the Nasdaq. It's been slightly more bullish. We actually have moved upwards rather than downwards over those last 4 days, which is quite interesting. They have tried to push it off this level, but again, it's not something that's jumping out of me to take. Oh, I have to take this. There is higher highs and there is higher lows, but again, this is sort of the only market that's showing that. Well, it's not, they're all showing it. Okay, but the S&P or the Dow is a little more bullish than the rest of them. So we have a low, higher low, higher low, high, higher high. Where the other two, you literally have 2 highs and 2 lows. So in this particular scenario, sit and wait. Yes, you can be quite bullish and potentially take a trade here and it may be a winner, but it's not a high probability trade. Now the German DAX coming down, it's similar to the likes of the S&P and the Dow. It's moved sideways over the last 4 days, hasn't really gone anywhere. And have you noticed that the likes of the German, the US, and the French CAC are pretty much correlated at the minute? Yes, the structure of the market looks a little bit different, but they're pretty correlated. The only one that's been a little bit different is the UK 100. And when I looked at this earlier, you would have been in a little bit of profit. So we talked about this on Tuesday and Wednesday. We talked about this potential trade here being triggered in. Depending on your broker, depends on whether you got triggered out here or not. If you're not, you're literally now at break even now again. Over these last 4 hours, it is now dropped down a little bit, and you're now at break even. You would have went up to just under a 1-to-1. You'd have taken this on the, say, the 4 hour. But again, it's like I said back on Wednesday, it's not a high probability trade. There is a trade there. It is not something I've taken. Why? Because I wanted to pull back to this level minimum, ideally back to this one. And then if it pulls back into those levels, then I'll have a proper look at it. But for me, it's not a trade there that I was looking to take. China still is in this sort of wedge shape going on. Let it or an ascending triangle. If you use the horizontal, depends on which pattern you're looking at. But again, it needs to break out one way or the other. Now, historically, you'd expect it to drop down, but eventually this now has to have a little bit of pop to the upside. Eventually, we're going to have momentum to the upside. Eventually, it's just a matter of when. When is this going to happen? This market has been in a downtrend now since February 2021. So it's a year and 2 months in a downtrend, so 14 months in a downtrend. We're eventually going to get some sort of pop to the upside. So let's see when it happens. And when this starts popping to the upside, I expect a pretty big jump to the upside once this goes. Because generally when we get the first movement, everyone jumps on it because why? There's loads of momentum to the upside. There's loads of room to the upside. We look from that high to there, there's loads of room. So today's price up to there is 50% upside, which is huge on an index. But it's just a matter of whether we will catch it or not. We look at oil. And so we had that double bottom on oil, and then we had a little pop to the upside. Now, today's bar hasn't really moved anywhere, so it's not giving us massive indication of anything sort of going on. And this is all down to news. Make sure you're watching the news. Make sure you're looking at what's going on. Make sure your ears to the ground if you're trading the likes of oil and natural gas, because this is very, very reactive to the war. It's very, very reactive to OPEC. So make sure you're keeping your ear to the ground the likes of that. Can we trade this at the minute? Nope. Stay away from it. Same with natural gas. Is this now the turn on natural gas? Are we now expecting this now to drop? Problem is that on the charts we've nothing out there before. So there's no way of saying that this is the area where it was going to drop. We had a short position here that didn't get triggered in. But the question is now, is this now going to pull back into this area? Is it now going to come back down to this horizontal? Or is it going to come back down to the trend line? How far do we think we're going to get a pullback? Or is this just a 1 bar pullback? Is this a 4 hour pullback here? There'll be a 4 hour pullback, sort of come to there and then bounce again. Is that what we're seeing? In your opinion, what are we expecting? Is this just a 4 hour pullback? Do we expect a pullback to the horizontal, or do we expect a pullback to the trend line? Okay, so most people are expecting a horizontal level. Absolutely, so do I. Does that mean then we can drop down to the smaller time frames and look for a trade? So we're expecting this to go back down there. I hope, because I'm shorting. But for me, there's no real technical reason to be shorting here. We drop down to the 1 hour, have a little look. Is this a phase one, phase two, phase one? Absolutely not. We have 2 bars. Unless you're trading off the 4 hour or the 1 hour chart here, there should be no one shorting that. Again, how do you know that this is a short position and this one here is not? What's the characteristic difference between the two of those? The answer is none. It's very little. This one had a double bottom, had a big sell-off, and then moved sideways and then took off again. This one didn't go out a lower high, moved sideways, and then took off to the bottom. So just make sure when you're shorting these on the smaller time frames, you have some real good, solid analysis behind it. And you're not just looking for a red bar on the higher time frame. Okay. But a lower high doesn't mean that the market is going to turn. A lower low is the indication that the market's going to turn. Okay. But again, if you take 100 of those, trades, will you have more wins than losses? The chances are probably no. Does that make sense? Because remember, the overall momentum is going here. You're going counter trend. Remember, there's always 3 things you need when you're counter trend: horizontal, price action, support, and a divergence. Why I haven't put in lower highs and lower lows, because it doesn't work in reversals. So we need something else. Okay. Okay, cool. I'm going to have a quick look at wheat as well. So wheat had a pullback. It didn't come back down into this sort of level. And then we've now got a little bit of a trend, a little trend to the upside. Question is, let's see if it hits its head there again and pops down to the downside. Let's see if it pops its head and drops back down again. Be interesting to see what happens here on this. We're going to pop over and have a look at crypto. We're going to have a look at crypto, so BTC. So crypto really hasn't played ball with us over the last 6 months, has it? Keeps bouncing sort of between the 45 level and 35 level. This seems to be sort of where the natural sort of levels are. Now, people can see this. People can see this. And they go, oh, well, Henry, there's a trend line there, and I'm looking to buy it here. Absolutely, you could. You could. No longer call it volatile. Well, yeah, I understand that. Yes, it's if it slowly continues going up like this, that'd be ideal. That'd be ideal. That'd be the ideal scenario for this. We can't again. We can't really call it over the last say since January, since the end of January. It's just been really slowly moving around. So for the last 4 months, it hasn't really gone anywhere. So the idea would be is start filling your boots up around anywhere around the 30K mark. So that seems to be where when it comes back down to it has a little bit of jump back up. So it seems to be the natural sort of value is if it's below say the 33K, it seems to be a little bit undervalued. And that's going on what's been happening over the last 6 months. So if it pops down here, yes, this is an ascending channel. I didn't really want to bring it down there, but there is. So they are trading between two levels. Absolutely. Absolutely. But again, if this now pops back up and hits a ceiling, then we shorted, so on and so forth. But it'd be nice to see that these lows continue getting higher and these highs continue getting higher. That for me is the main thing. As long as these highs continue getting higher and these lows continue getting higher, that's the main thing. These lows continue to grow and the highs continue to grow. We don't really care whether we're profitable or not at the minute on the likes of these on the likes of this asset, because this is something that we're looking at long term. We're not looking to jump out of it in 6 months. We're not looking to jump out of it in a year's time. The idea of this asset is in 5 or 10 years time, 20 years time. Where is it going to be? Do we think in 20, 30 years time buying it at between 30 and 33K, that's a good investment or not? And again, only time will tell. It could drop the whole way to 500 quid. And it's a really bad investment. But again, we'll literally time will tell. This is something that it's slow and steady. It's the same with any of the other assets we trade, unless it's a CFD. If it's a CFD, then this is not slow and steady. This is if it's a CFD, get in, get out quite quickly. And that's the difference. Problem with this is now we've no fundamental news. We can't hold a tangible asset in our hands. So what we're looking for is use cases. What we're looking for is being incorporated into, say, the metaverse, incorporated into real life attributes here, whether it's buying and selling stuff as well. So it's about being incorporated into more and more stuff. And the more that happens, the more this is going to be used, which means then it's going to be incorporated and the value of this is going to continue rising. So ADA, it didn't hold at that level, ADA, which is a little bit disconcerting now. It broke through this level and then come back down to this level again. So what we wanted it to actually hold at this level again, which is a little bit annoying, but the idea would be is if it comes back down to this triple bottom, would we expect this to bounce again? Would that be a good point to potentially be buying a little more of ADA? Absolutely. If it comes back down to here, because this now becomes a new floor. Because of this one has been broken, this now becomes a new floor. Will it hold? Will it not hold? If it comes down to there, do we now place another buy order? Do we dollar cost average in now? There's the first position. First position there is a 1.9. There's the next position, 1. Do we now put an order in here at about 0.8? And if it comes back this far, do we now buy another position in it? And it's bringing down the average open. Matic. So Matic has seen a sort of forge its own floor a little bit lower than the one we had, slightly lower. Well, there. 1, 2, 3, 4, 5 touches. Is this a place now where we buy some more Matic? Or do we expect it to break this floor? What's the consensus? Someone says break the floor, someone else says buy. Well, looking at the market as a whole, you'd probably expect it to break the floor, wouldn't you? You'd sort of expect it to break the floor here, wouldn't you? But again, is it a bad position to be buying another little bit? No, it's not. We're back at historical levels. The next one, if it broke that, would be about the $1. Similarly, this is at a horizontal level again. Where are the next levels on this? So they're the levels for me after this. So this one is very similar to Matic, very similar. It had a descending triangle, popped up, and now come back down again. The general consensus would tell me that I'd expect it to break this floor. Very similar to Matic, would expect it to break this floor. And then if it breaks this floor, there's the next one. 28.6 and 11 is the next one. Tron, for me, has to get down to that level down here. If it gets down to this level, then there's another little buying pattern there. So we're now looking at levels again to potentially be buying these up. We haven't quite hit that floor yet on Solana. If it comes back down to here, do we expect to buy Solana? So the idea is to put orders in these places. If you're looking at these assets and you think there's room for these to grow, instead of waiting for them to hit these levels, you put orders in on these levels. So if we go to portfolio, we go to orders. Look, I have two orders there. One at 31,000 and one at 21,000. So why do I have orders at 21 and 31 rather than, I think the high was 20 and a half. And I think 30,000 was the other level, 30,000 and a half or something like that. So why do I have the order at 21 and 31? Good. Everyone seems to be trigger or in it today. One is that if it comes back down to that level and bounces off the level, I want to be in the market. So two things can happen is that may not quite hit that level. It may come down very close, but not quite hit that level. So that's one. Second thing is the spread. Is that I want to make sure that if it hits that level, I want my entry to spread above it. Okay. So it means then I get triggered into the market. Because how often have you seen these spikes and swings? It hits one thing and then it just takes off in the opposite direction. This happens all the time. So make sure you're setting yourself up correctly for the likes of these trades. Anyone want me to, in the next 3 or 4 minutes, anyone want me to check anything else for you guys? For the last 3 minutes. Sand. Again, very, very similar to the rest of them. Let me see where the levels are underneath this. There's a very soft one there. A very soft one there. And one down here. Now, I don't know whether that's just a glitch on the software or whether that's real, but we have a couple of touches over here, and that's why I'm incorporating that as well. So what we have here is we have a downward trend, very, very similar to Matic, very, very similar to Solana, very, very similar to whatever that other one was that we looked at, AXS. That's not real. Trading view is different. Well, that's ET Taurus chart, so it's unfortunately it's. I didn't think it was real, but it could have been on crypto. But we have a horizontal level bounce once, twice, three, four times. Now we've had a little jump today, but I wouldn't be surprised if this breaks this level. It's the same with across the market. It all depends on what Bitcoin is doing. If Bitcoin takes off to the upside, then these all take off. If Bitcoin continues doing what it's doing sideways, I'd probably expect a little bit of downward pressure. I'd probably expect them to break these levels eventually. I can see the crypto world holding on to the likes of these. I would expect it to get cheaper over that period of time. Euro USD. So let me see if Euro USD is on our list. So Euro USD is not on the list. So for me, there is no trend on Euro USD. We shouldn't be trading it. USD JPY for me should be a buy. And USD CHF again here says a buy. But that could be different because US dollar has been one of the strongest currencies over the last couple of days. And if we have a look at this, US dollar is +1, CAD is +4, and then Aussie's +6, but Aussie is losing strength and JPY is the -6. So that's the weakest one of them all. Let me have a quick look at them. So Euro USD. Now Euro USD doesn't have two clear cycles, so that's why it's not trending. The overall market is down. We are massively late in this phase one. So phase one to the downside, we are massively late in this. So this is not something we should be trading. So we have 1, 2, 3 bounces there on this. So there is a potential turn on this one. Okay, see you later, Audra. Bye-bye. So there is a potential turn on this one, but again, this is not something that I'm looking to trade. Why? Because we're overextended. We're too far in this phase one for me to be trading. Absolutely not. USD CHF. Similarly, again, it's gone up. We looked at this trade here last Wednesday. We looked for a one-to-one here. Why? Because we had a big old horizontal here. So we didn't want to trade it in there. As it turned out, it actually went on and would have been probably a 3-to-1. 3 4s is 12. It would have been easily a 3-to-1 if we had have traded it. Remove. Okay. Also, we are now made a higher high. We do have a horizontal level there. Let me have a quick look at it. So look, 1, 2, 3, 4 on this. US dollar is stronger than CHF, but we will have some downward pressure on the likes of this off this horizontal. And US dollar in the Dixie dollar index. And the dollar index looks very, very similar to euro. Why? Because it is 60% weighted against euro. So we are overextended here. We need some sort of a pullback. And if it come back into that area, that would be a nice little area for us to see some sort of pullback. We've a little bit of a level there. And we have one up there. So US dollar, we need some sort of a pullback. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening. Just to give you a little heads up that the webinars, I'm on number 49 of 50 webinars. So we have one more of these webinars, and then there will be a new link. Okay, I will have the new link ready for next Tuesday. So just to give you a heads up, there will be a new link. I will be sending you all an email of the new link. So just be aware. So next Tuesday is the very, very same link. And then after that, then it will be a new one. Okay. Thanks, everyone. Hope you all have a lovely evening, and I'll speak to you all next Tuesday. Bye-bye.